Imagine a country so small that its entire population could fit inside a football stadium, yet suddenly it finds itself at the very center of the global economy. This is not fiction. It is the reality of Guyana, a nation of fewer than 800,000 people that, until just a few years ago, was invisible to most of the world. Welcome to Tellnomics, where we uncover the hidden gears of the global economy and show how distant events can redefine your future. Get ready, because the story you are about to hear is how one of the most forgotten places on the map became a central player in the global oil rush. Located in the northeast of South America, Guyana borders giants like Brazil and Venezuela, yet it rarely makes the headlines. Its territory spans 215,000 square kilometers, comparable to the size of Greece, but its population is smaller than that of medium-sized Russian cities such as Voronezh. For centuries, Guyana's history was shaped by colonization, slavery, and neglect. First a Dutch colony, then British, the economy survived on sugar, cocoa, and coffee. After the abolition of slavery in 1834, thousands of workers were brought from India, creating an ethnic diversity that still defines the country today, where about 40% of the population is of Indian descent, according to the World Bank. When Guyana finally gained independence in 1966, it could not escape the fate common to many former colonies: a fragile economy, unstable institutions, and mass emigration. By the 1990s, GDP per capita hovered between $2,000 and $3,000, among the lowest in the continent according to International Monetary Fund data. Rice, sugar, and bauxite were practically its only sources of revenue, while nearly one-third of the population sought opportunities abroad, mainly in the United States and Canada. What would you think of a country with no infrastructure, alarming poverty levels, and little international relevance? Perhaps that it was condemned to eternal stagnation. But the global economy loves to defy expectations. The World Bank had already classified Guyana as one of the most vulnerable states in the Americas. Yet in 2015, something happened that would change everything. A discovery so unexpected it seemed like winning the lottery. And here lies the crucial question: how can a forgotten, impoverished, and resource-lacking nation suddenly become the fastest-growing economy on Earth? Who will truly benefit from this transformation? And to what extent can oil be a blessing or a curse? These questions mark the beginning of a story that goes far beyond numbers, a narrative of ambition, power, and destiny. And that is exactly what we will uncover next. In May 2015, when the world believed that all major oil fields had already been mapped, from Saudi Arabia to Kuwait, from Venezuela to the North Sea, a surprising announcement came from the Caribbean. The American company ExxonMobil revealed the discovery of massive reserves in deep waters, 200 kilometers off the coast of Guyana. These were not just small deposits, more than 30 high-quality oil fields, with confirmed reserves that by 2024 had already surpassed 11 billion barrels, according to ExxonMobil's own data and reports from the International Energy Agency. This placed Guyana on par with countries like Mexico and Norway in terms of total reserves. Now, imagine the contrast. A country with fewer than 1 million people sitting on a resource wealth capable of reshaping global geopolitics. On a per capita basis, the volume of oil available to each Guyanese citizen is among the highest in the world. But there is an even more striking detail. While such large-scale discoveries typically take 7 to 10 years to reach their first production, Guyana achieved that milestone in just 4 years. In December 2019, the first barrels were already being exported. And why so fast? Because ExxonMobil had decades of experience in ultra-deepwater exploration and brought with it not only cutting-edge technology, but also strategic partners. The American Hess Corporation took a 30% stake in the project, while the Chinese state-owned CNOOC secured 25%. Lacking technology and capital, the Guyanese government ceded full operational control to the consortium. This allowed the country, once dependent on rice and sugar, to start exporting hundreds of thousands of barrels of oil daily. But here comes the first dramatic tension. If in just 4 years Guyana went from obscurity to an unprecedented economic boom, who is truly reaping the rewards? Does this wealth belong to the Guyanese people or to international corporations? According to a 2023 report from the International Monetary Fund, more than 85% of the country's GDP already came from oil exports. Growth is skyrocketing, but will it land safely or explode mid-air? This is the dilemma that forces an inevitable reflection. When a small nation discovers a gigantic treasure, does it become master of its own destiny? or merely another pawn in the hands of global powers? And here is where we must pause and look beyond the euphoria of numbers. Because up next, we will uncover how this economic miracle radically transformed Guyana's statistics, and why poverty still clings to the nation like a shadow that refuses to fade. And have you ever stopped to wonder if every rapid economic boom carries with it an invisible trap? Between 2019 and 2023, Guyana experienced what economists call hyper-acceleration. The country's GDP soared from around $5 billion to more than $17 billion in just 4 years, according to official World Bank data. To put this into perspective, in 2022, annual growth reached 62%. In 2023, it hit 33%. And in 2024, it surpassed 40%, figures 4 times higher than China's best growth years, when the Asian giant advanced between 10 and 15% annually. This pace placed Guyana at the very top of the global economic growth rankings, but the most striking impact can be seen in GDP per capita. With a population of roughly 800,000, in 2024, the per capita figure exceeded $30,000 according to the International Monetary Fund. This level is comparable to Spain or South Korea, and nearly double that of Russia. What was once one of the poorest nations in the hemisphere suddenly reached indicators worthy of developed countries. It is as if a worker surviving on minimum wage suddenly began earning a comfortable middle-class salary overnight. But is this money truly reaching everyone's pockets? Here comes the first shock of reality. Despite headlines celebrating success, about 40% of the population still lives below the poverty line, according to World Bank reports. Many remain dependent on subsistence farming, growing rice and sugarcane, with no direct access to the billions in oil revenue. This creates a cruel paradox. While economic growth charts skyrocket, social inequality deepens. A small elite linked to the energy sector amasses fortunes, while vast rural areas remain without basic infrastructure. Even more concerning is that oil already accounts for about 90% of exports and 85% of the national economy, according to the International Energy Agency. This means Guyana is dangerously close to what experts call the Dutch disease, when a single resource dominates the economy, leaving everything else vulnerable. But how can a country grow so much, so fast, and still leave nearly half its people behind? Will Guyana manage to escape the fate of other nations trapped by the so-called resource curse? Now we are about to open the black box of the oil contracts and reveal why much of this wealth, instead of staying in the country, flows straight into the coffers of multinational corporations exploiting its reserves.
And perhaps you'll discover that the true lottery was not won by Guyana, but by those who signed virtually bulletproof contracts. And here begins the most controversial chapter of this story, the contracts that defined the destiny of Guyana's oil. In 2016, when the first discoveries had already been confirmed but production had not yet begun, the government signed a production sharing agreement with the consortium led by ExxonMobil.
At first glance, it looked like a victory for a country without technology, without capital, and without experience in the oil industry. But upon closer inspection, international experts pointed to glaring imbalances. According to Global Witness, an organization that investigated these contracts in 2020, up to 75% of all gross production revenue could be used by companies to recover costs, from drilling to logistics. Only the remaining 25% would be considered net profit, to be split equally between the state and the companies. In practice, this meant Guyana received just 12.5% of the value of the extracted oil, plus a symbolic 2% royalty, according to official government documents. On top of that, there was no corporate income tax, something almost unheard of in contracts of this magnitude. For the companies, it was the dream deal: minimal risk, guaranteed return. For the country, it was an entry ticket into a multi-billion-dollar industry, but with drastically limited profits in the short term. But can the blame fall solely on the companies? The government at the time argued that without offering extremely attractive conditions, no investor would dare risk billions in ultra-deep-water exploration in a nation without ports, without pipelines, without a skilled workforce, and with fragile political institutions. And history does offer precedents. In the 2000s, the Russian company Rusal controlled up to 90% of profits from Guyana's bauxite extraction, yet the country accepted it, simply because there were no alternatives. This dilemma raises an uncomfortable question. Was it a strategic mistake or an act of survival? On one hand, Guyana entered the global oil map at record speed. On the other, much of the wealth that could transform the country continues to flow abroad. And this vulnerability would have even bigger consequences, because Guyana's success did not only attract the greed of foreign investors, it also reignited old regional ghosts. Now, you will see how the oil explosion revived a century-old territorial conflict with Venezuela, turning a dream of prosperity into a looming geopolitical dispute of massive proportions. When oil began to flow, it was not only multinationals that took notice. Neighboring Venezuela, mired in political and economic crisis, revived a territorial dispute more than 150 years old, the Essequibo region. This area covers nearly two-thirds of Guyana's territory, rich in minerals and now potentially in offshore oil. The dispute dates back to the 19th century, when an international tribunal in 1899 granted possession to what was then British Guyana. Caracas never fully accepted the ruling, and after Guyana's independence in 1966, the conflict returned to the surface. What seemed like a dormant diplomatic matter reignited precisely in 2015, the year of the oil discovery. In December 2023, the Venezuelan government held a referendum in which the majority of citizens supported the annexation of Essequibo. For Georgetown, Guyana's capital, this act was seen as a direct aggression against national sovereignty. The case is currently before the International Court of Justice, but tensions continue to rise. And it is not just rhetoric. The United States has declared explicit support for Guyana, including cooperative troop deployments in the region, according to the U.S. State Department. Brazil also reinforced its military presence in Roraima, fearing spillover into its own territory. At the same time, ExxonMobil, the main operator of Guyana's oil, received formal guarantees of protection from Washington. This mix of national and corporate interests raises an unsettling question. How far can a small country resist when its sovereignty collides with the interests of global military and energy powers? Recent history shows that disputes over resources rarely end quietly. Oil has turned Guyana into a protagonist, but also into a target. And the most intriguing part is that, amid this international chessboard, the Guyanese people are still waiting for the promised wealth to reach their daily lives. The Essequibo conflict is not just about lines on a map, but about the future of millions of barrels of oil and billions of dollars in revenue. Moving forward, we will see how Guyana's government tried to renegotiate the rules of the game, creating new frameworks for oil contracts. But you will discover why, even then, the country remains trapped in agreements that limit its economic sovereignty. Faced with internal pressure and growing public dissatisfaction, the Guyanese government realized it could no longer passively accept such unbalanced contracts. In 2023, after intense negotiations, new rules were announced for all future oil exploration projects. The cost recovery ceiling dropped from 75% to 65%, royalties increased from 2% to 10%, and, for the first time, a 10% corporate income tax was introduced. In addition, the state's minimum share of net profit rose from 25% to 35%, according to official documents released by Guyana's Ministry of Natural Resources. These changes were presented as a victory for national sovereignty, but there was one crucial detail. The most lucrative contracts, including the giant Stabroek block where the bulk of production is concentrated, remain locked under the 2016 agreement, which will not expire for decades. This means that, despite the reforms, most of the wealth will continue to flow into foreign hands. Popular frustration grew, because while macroeconomic indicators skyrocketed, schools and hospitals still faced basic shortages. At the same time, another dilemma emerged: how to rapidly develop a skilled local workforce to take part in the oil industry. In 2019, virtually all offshore platform workers were foreigners. By 2024, about 30% were Guyanese, and the government set a target of 50% by 2030. Universities and technical institutes began offering courses in offshore engineering, geology, and maritime logistics, in a race against time to avoid repeating the mistake of other nations that remained dependent on foreign expertise. But will these reforms be enough to reduce dependence on multinationals and prevent Guyana from becoming just another resource colony? And to what extent will the new contracts shield the country from corruption and the political capture of local elites? Now we dive into the historical comparisons. Countries like South Korea, Qatar, and Saudi Arabia turned their natural wealth into sustainable development, while Nigeria and Venezuela collapsed under the weight of their resource dependence. Which path is Guyana about to follow? Today, Guyana faces a dilemma that echoes historical examples from across the globe. Looking at South Korea in the 1960s, we see a nation devastated by war, dependent on foreign capital, and with little technological know-how. Yet just decades later, by investing in education, innovation, and strategic partnerships, giants like Samsung and Hyundai emerged, transforming the country into a global tech hub. Qatar also began its journey dependent on international companies to explore its vast gas reserves, but gradually gained full control of the sector. And today, Qatar Energy is one of the largest energy companies in the world. Saudi Arabia followed a similar path. In the 1930s, all of its oil was controlled by American firms, but within 50 years, Saudi Aramco became the largest oil company on the planet. On the other hand, there are cautionary tales. Nigeria, Africa's largest oil producer, continues to struggle with corruption, violence, structural poverty, and near-total dependence on petroleum despite decades of extraction. Venezuela, once one of Latin America's wealthiest economies, collapsed into political and social crisis after relying almost exclusively on oil revenues while neglecting diversification. The numbers speak for themselves. According to the World Bank, about 90% of Venezuelan exports still come from oil, yet hyperinflation and lack of investment devastated the economy. For Guyana, the question is both urgent and dramatic. Which story will it write? The country now stands before the possibility of becoming the new Dubai of the Americas, but it also risks repeating the cycle of failure and instability that has trapped so many resource-rich nations. This uncertainty creates constant tension, a narrative thread that captures not only economists, but also political leaders and investors worldwide. We are witnessing a rare moment unfold in real time. A small country, which less than a decade ago was nearly forgotten, now holds one of the greatest energy potentials on Earth. But like any lottery, the ultimate question remains: will Guyana know how to manage its prize, or will it fall into the temptations of short-term gain? And so we reach the final point of our investigation. Guyana is about to write its destiny. Will it be remembered as an economic miracle, like Norway and Qatar, or as yet another victim of the so-called resource curse, like Venezuela and Nigeria? If you've followed this journey so far, subscribe to Tellnomics, like this video, and leave a comment. Your support helps us continue to bring you stories that reveal the hidden mechanisms of the global economy. Thank you for being with us, and get ready, because our upcoming analyses will uncover even more about the dilemmas shaping our world.